But if you're honest with yourself, if you were to own one or the other, then you find that the NASDAQ has underperformed Bitcoin by 99.94%. What is the point of owning any other asset? This is the supermassive black hole of assets, which is why we personally are all in on crypto, because this is the big one. This is the greatest macro trade of all time.
Raoul Pal highlights Bitcoin as the ultimate asset, outperforming nearly every market with massive long-term returns. He calls it the greatest macro trade of all time, emphasizing that owning crypto is essential for building future wealth. He explains that current market trends are driven by debt refinancing and liquidity cycles, not traditional economic factors. With global liquidity expected to rise and rates likely to drop, crypto could see strong growth continuing into 2026. Pal also notes that early opportunities lie in spotting new projects before they list on major exchanges. By combining research, community insights, and on-chain data, traders can gain an edge and position themselves ahead of the next big move in the crypto cycle.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So Bitcoin, some people thought it was the halving cycle. It's not. It's the debt refi cycle, because it happens in all assets, the NASDAQ, commodities, everything. And it's driven by this like spring, summer, fall, winter. And they're all corresponding to how much money they're printing at any one period of time. Winter's when they're not printing money, but the others are when they are. And so those are these economic seasons that we talk about. So recently we noticed that, hey, the ISM, and you've heard Julian and I not struggling, but trying to understand, okay, what's changed in our framework? Our job is to understand and double test our framework at all points. So when something major is changing, which was the ISM not fitting the 4-year perfect sine wave, we started thinking, what's going on here? The ISM is more subdued than it has been ever. And we found out that the debt had been moved in 2021-22 because interest rates went basically back to zero. They managed to extend the curve by issuing further out, and they extended the debt maturity from 4 and a bit years to 5.4 years, creating a new longer cycle. Now, we don't know what length the next cycle is. It depends on where they refinance this entire cycle at. But right now, we know we've probably got an ISM and a business cycle that extends well into late 2026, and that will affect asset prices. So this is why markets have been acting, well, crypto markets have been more subdued than people expect. And we'll come onto that in a second as well. The other thing is interest rates. Interest rates haven't needed to yet come lower, but now we're seeing the urgency from Scott Bessent, who understands the everything code, and Steve Mirren and Trump all saying we need to get rates lower. Why? Because we've got $9 trillion of debt to roll over the next 12 months. It's this 12 months that is the key to everything. It's this 12 months where maximum money printing comes.
Raoul Pal highlights Bitcoin as the ultimate asset, outperforming nearly every other market and calling it the greatest macro trade of all time. He believes falling interest rates and rising liquidity could push crypto's bull run well into 2026. He adds that the biggest profits come from spotting coins early, before they hit major exchanges. By combining research, community insights, and AI tools, investors can find hidden crypto gems and stay ahead of the market.
So when we look at NASDAQ versus total liquidity, so this is the outperformance of NASDAQ versus total liquidity, we can see that it's been doing about 13.8% in excess returns. So you've been handsomely rewarded by NASDAQ. Why? Because tomorrow is going to be more digital than today. So many people are so stupidly scarred by 2000, when this has been the greatest bull market in history, is the NASDAQ, going back to 1985, 1990. And yet people still miss it because there was once a bubble that burst. But even then, returns have compounded massively over time. So that looks good. We understand technology investing. We understand the rise of these new giants. We're seeing the change from the internet world to the AI world. That's driving excess returns again. But when we think of Bitcoin, it's actually driven 94% a year excess returns over the rate of debasement. So you've got this asset that is in la la land in returns versus anything else. It's 144% annualized returns. That's including all of the drawdowns. So all of the bullshit nonsense about Bitcoin's too volatile, it's a bubble, it's going to burst. That happens every cycle. People don't understand. It's the duration of your investment that matters. If you have a long-term time horizon, those pullbacks are actually what you look forward to because you can buy more at cheaper prices. Or you can, if you want to, reduce risk from the cycle. I've done both, and I've found, generally speaking, if you don't need to take lifestyle chips off, it's better to have the drawdowns and not try and time them, because I've done that too, and that's not the easiest one always. And it's also very difficult to put back in what you took out at the peak. You know, if you've taken out 100 grand at the peak and the markets are crashing, everybody hates crypto, you think everybody's going to prison, the last thing you want to do is put your 100 grand at risk back again. So you always do less, and you end up actually lowering your returns over time as opposed to adding to it. So you've got these assets that are cyclical, that have this incredible adoption rate that in excess of the debasement of currency, which is crucial. And Bitcoin is the one. That megatrend is so powerful because it's how you unfuck your future. Now, if you look at all of the assets on this table, what we've got is everything in orange here underperforms the debasement of currency. So you're actually getting poorer by owning small caps, REITs, treasuries, preferred, high yields, investment grade bonds, everything, unless you're using leverage. There's only a few. The SPY, well, really that's in line with debasement plus inflation. So when we're looking at those, you've actually only got two asset classes, technology stocks and crypto. And within crypto, you've got these ridiculous returns where Bitcoin since 2012, 2011, we didn't go back to 2010 or 9 because the numbers get too stupid, has annualized 130% with that 64% drawdown, 73% drawdown, and 56% drawdown. Ethereum is doing about the same, about 133%, and we expect it to outperform in this cycle as it has done in all of its cycles over time. And Solana is currently, because it's newer in its adoption model, has been outperforming Bitcoin. And then if we were to add SUI in here, which Julian and I are heavily invested in, that has outperformed Solana because it's earlier in network adoption, where you get the steeper part of the adoption curve. So really speaking, there's not many assets to own unless you want to fuck your future personally. So when you want to unfuck your future, you start to think about, okay, I've got crypto and NASDAQ. And I know a lot of you right now are all trading tech stocks because Bitcoin's been in this kind of sideways chop period. So you're all piling into tech stocks. Julian and I have tons of them in the portfolio. We love the technology trend. It's a really easy trade, has been an easy trade. But if you're honest with yourself, if you were to own one or the other, then you find that the NASDAQ has underperformed Bitcoin by 99.94%. What is the point of owning any other asset? This is the supermassive black hole of assets, which is why we personally are all in on crypto, because this is the big one. This is the greatest macro trade of all time.
Raoul Pal says Bitcoin remains the top asset, outperforming everything else and leading the next big market cycle through 2026. He sees strong fundamentals and liquidity driving this growth, calling it the greatest macro trade of our time. He also notes that the best gains come from spotting early crypto projects before listings, using smart tools and research to stay ahead. Do you think Bitcoin will keep dominating in 2026? Which altcoin do you see rising next? Share your thoughts in the comments.